internet, welcome back to my channel, and today we are here again with another episode of reading the stock market charts. And right now in front of me is SPY, the chart of SPY, and we are on the daily chart. And in my previous videos I have been going step by step that what's happening in the market, and we have been mentioning that the market is actually in not an accumulation phase and a distribution phase. And usually the not usually distribution phase does mean that the market will fall down eventually, but actually we were expecting a double top which did not occur. And I mentioned that only the market is going to fall if MACD comes below the 0 point on hourly chart, which is this chart. You can go back on my videos. I'm also going to link the video up here in the cards, where you can see that I mentioned about the double top pattern, and I said how and when it's going to work only if MACD comes below the 0 point, which it did not. And that is why the new trend has just started, and the double top did not occur the way we are expecting, despite the definition of double top was completely going really well on the chart, which is usually according to the definition that if you can see that the market has actually broken the previous strong supports, it means it's a strong double top and the market is going to fall down. So this is the daily chart, and as I mentioned that the double top, according to my the way I read the chart, the double top is not when actually there are double tops formed and the market will just come down, but there are some technical indicators that I use to confirm if this double top is really going to work or it's just a fake one. And in this case it was not a genuine double top, because the MACD on the hourly chart, where we were seeing the divergence, negative divergence and distribution phase, it did not actually happen, because I mentioned the market is not going to fall down unless this MACD comes below the 0, and it did not come below 0 and a new trend started. So for the new trend, these are my calculations that I'm going to share with you. So if you want to open a position, you can do so by on your own risk, because market is a place where you cannot guarantee anything. Anyways, this idea has been posted by me here on tradingview.com, and it has already started working really nicely. So the idea is that when I do I'm going to explain how I did this calculation, but before mentioning how I read this chart and why I think the market will go down, let me share the idea. The net that the market will go high directly, like in the upcoming days, to approximately 313 level. Why I think this is going to happen? Number one, it's a new trend start. So whenever there's a new trend start, yes, you can see a red day in the same new trend, but the general trend is going to be upward. Again, I want to mention here that this idea is only for swing traders and not day traders, because for day trading or intraday trading, you have to go on the lower time frames to actually see your position and all that. So this is for completely a swing trading idea. So don't tell me that, oh, I have already bought it and it's not going up, because in the same day you might not see that profit that we are expecting. So this is the target that I'm looking forward for, because despite the distribution and negative divergence, the new trend has started, because there were not enough sellers in the market, in trapped sellers that I mean. So when there are not enough trap sellers, the big people, the big B's and all those guys are not gonna put themselves in small losses even. So let's go forward and let me explain how did I drew this fibs and why I think it's a new trend. Here you can see that I drew the fibs from this last trend, which was this one coming down from this point, which is 302.53ish, to this point, 284.95. Okay, many people say that when there's a wick, you should not call it that as a price action, but everybody has their own way of reading how what is a price action and what is not. So for me it is actually a price, because people, the traders were actually in here and they did touch this area, but then they, the big B's, the big guys, trapped all these people who thought that okay, the market is falling down, and they started shortening the market, but suddenly the market blew up and move upwards, and here all these guys got trapped. So whenever you see a wick is actually the trap traders in the market who are looking for another, if the wick is downward, they are looking for another dip in the market, and if the wick is upwards like this one, they're always looking for another movement upwards in the market to close their position in order to secure their investment. So for example, in this position, in this case, we did not see another dip here. So that is why it means these people were completely trapped. Okay, this is a big number. This is a pretty big wick, and there are also other factors. But right now, I'm just explaining the wick here. And since you can see that this wick trapped a lot of traders here, and then it started moving up, and then it came, and this is the area where it came, which is above 50% of the fibs. Okay, now a simple way of reading the next direction of a market is to see that how much the retracement has occurred in the from the previous trend. What I mean to say is, when the market came down, it retraced back here, and this is the 50%, and it retraces back more than 50% in the market. So when it retraces back more than fixed 50%, according to the math, the calculations that automatically happen, as you can see, I'm using fib, so it is the natural calculation. The next direction of the market is always in the direction of the retracement. But you can see it's a, it comes down again. Why it comes down again? Because it's a retest of the price, and in order to trap further, short people that have shortened the market. So in here, when the market started coming down, these people that were already trapped, they would have closed their positions here. That is why we can see a big drop. So this drop is not basically of the people of the traders that have actually shortened the market, but rather these trapped guys have closed their positions here. What happens? Since these guys close their position here, the market starts moving up, because there is not a lot of pressure towards the short side. Instead, just the people who have already shortened the market and trying to close their position, and according to the technical readers, the next entry point for anybody to short the market would have been below this area, because this area needs to be cleared before any fresh traders to short the market. The only people that will short the market in this area would be only naive and new traders, and those that do not understand technical analysis. Anyways, moving forward, so this is why it retraced back and it completed this trend line, this completely. But the fib draws the next direction, next level, the next natural resistance or support levels automatically when you use the fib. When you're using the fibs, so this is according to the fibs. This is the natural next resistance level, and that is why, since we have already mentioned that the next trend is going to be upward. So where would this upward trend start? It would stop. It would actually stop at the next natural resistance of the fibs. So this is it for why I think the market will go up, and why and where it will go. Today is October 29, 10, 2019, and I'm I have already posted this idea on the on my tradingview.com profile, and it's working already. And the previous idea where we thought that the market would we need to short the market, but as I said, I'm not going to suggest that the market should be shorted unless it goes below the MACD 0 level, and it never happened. So I believe the position should have not been taken by the traders. But again, I believe that it was pretty and I completely agree with the traders that were posting the idea that short the market is going to drop, because there were all reasons to short the market, since we could not actually read any any accumulation in the market at that point. But again, you actually are not supposed to be intimidated by what you think the market is going to do, but rather use the proper method, use the proper signals, and use the proper confirmed entry points in order to enter a market. And for me, the entry point confirmation was fall of MACD. I'm again gonna post the links in the cards on this video, where you can see that I mentioned about that in order to short the market, we have to actually wait for MACD to fall below the zero level. And in my one of my videos, I've also mentioned the double top, and I have explained what the double top is according to the definition. But the definition did not work this time. So I guess you are supposed to go for rather technical analysis details rather than just following the definition. Okay, this is it for now, guys. Until next time, take care. Bye bye.